following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and that rockin' theme means it's time yet again for the Option Block, your bi-weekly source of options news and information, insight and analysis, and once in a great while, hilarity. My name is Mark Longo from the OptionsInsider.com, as well as the old Options Insider Radio Network, and I am joined today on the old all-star panel, starting off with a regular on the old show these days, known to his legions of adoring fans as the Rock Lobster, a.k.a. Mr. Maine himself, Andrew Giovinazzi from OptionPit.com. Andrew, welcome back to the show, sir.
Thank you. It is great to be here. I had to get all the lobsters off my driveway, though. I had to kick them back into the water.
Yes, you have that problem.
They're jumping out. They're jumping out of the water.
All these succulent lobsters offering themselves to you all day must be so tiresome.
Well, it is because Maine, it's 75 degrees, it's breezy, it's lovely, and yes, it is very tiresome the way these lobsters operate. Very, very tiresome.
The lobster futures market must be in the toilet there in Maine because they're just so abundant. It's like Kuwait. Exactly. People wash their windows with gasoline in Kuwait, so people must wash their windows with lobster oil in Maine.
Exactly.
And also joining us for this ridiculous panel today, we have Sean Fitzgerald holding down the OX hot seat today. Sean, welcome back to the show, sir.
Thank you very much. Trying to stay cool. We have a 100-degree day today here in Chicago with the heat index at 106. Very unusual for many people. Some people actually probably want to stay at work a little longer so they don't have to walk to the train station.
Yeah, my little guy had his second day of summer camp today, so I'm guessing it's going to be a lot of, not too much outdoor play today, I'm thinking, a lot of indoor play, at least I hope. Otherwise, he's going to come home cooked. But yeah, a good one, a good hot one today in Chi-Town. Of course, these are the days people always lament the wind here in the Windy City and how cold it can be in January and February and March. But this time of year, June, July, August, when it's getting towards the triple digits, it's nice to have that nice steady breeze between the high-rises here downtown, because I had lunch right out on Wacker Drive yesterday outside, and it was a balmy 80 with the wind blowing. Of course, it was almost 100 everywhere else, but with the wind howling down the street, it's nice and cool. So this is the time of year when you really appreciate that constant wind howling through downtown here. All right, and with a little bit of weather facts, we're going to close out the old intro here and dive right into the trading block.
The trading block.
And it was a crazy one on the old street today. Almost a blink if you miss it rally towards the end of the day. Most of the day we spent with the vast majority of the broad indices down around 1%, sometimes a little north of 1% throughout most of the day. Of course, most of that weight coming on the broad market from the Supreme Court decision this morning, a very tight decision to uphold Obamacare, and of course that additional, however you want to see it, that additional tax on the market really weighed across the board, with most of the indices down well over 1%, like we said, most of the day until literally the last half hour of the day. I was prepping for the show, and I stepped away from my screens for a minute to prep for the show. I came back towards 3 o'clock, which is our recording time here in Chicago, and lo and behold, all of the indices had pretty much erased most of their losses for today. We closed in the S&P down about 0.2% to 1329. The Dow closed down the same amount to 12,602, and the Nasdaq closed down, the leader on the day, down nearly 1% still on the day, to 25, almost 26 handles to 2849. And of course the VIX cash moving to the upside, though perhaps not as much as you might expect given the day's activity. Certainly from a vol perspective, the VIX not performing up to expectations, closing up about 0.25 point to 19.68. Andrew, let's start there, because that, of course, is, I think, where a lot of people, particularly in the options realms, eyeballs were focused today on the VIX and how it really wasn't performing as I think a lot of people would expect given today's activity.
Yeah, we brought up in our pit report, watching it, basically, the reaction to the move down in the index has been weak from the VIX point of view all week. Barely keeping up with the move. The index skew is real flat in the VIX. Real flat in the SPX, which I think is part of it. And even looking today, I'm still trying to figure out what the big sell-off was. I mean, at one point, VIX cash was like $1.50 higher than it closed, and I'm still trying to figure out why they sold it off. I haven't seen any news, and I don't watch CNBC, or I tried,
That's a good practice to avoid that whenever possible.
Well, it confuses me. I'm not that bright.
Don't get into the noise. Don't get into the ether of CNBC if you can avoid it.
Right, but I'm still watching the VXX trade after hours. Trade on a closing price, so I guess the sell-off wasn't. I'm just trying to figure out where it came from. But yeah, the VIX had not reacted strongly at all day. And finally, so something somewhere. Now, what I found weird is that basically the Germans said they might gobble up, they might mutualize the debt if they could get a fiscal compact across the EU, which probably the chances of that are, what are the chances of that? I guess hell freezing over. But maybe they heard some noise. Maybe they heard some noise somewhere. That
is that your clown car calling to you?
Yeah. Well, actually, that's Mark. I'm asking him where where you saw any VIX noise.
Oh.
He said they're taking the weekend out today. I'm like, I just don't believe that.
Yeah, I thought the same thing when I watched it. I said, can they possibly be taking the weekend out already? That to me seems insane if that's the case. If these guys are that complacent to take the weekend out already. I mean, have you learned nothing from the last 6 months or a year of the market to take the weekend out now? That's absurd. I mean, the problem is you have all these dueling narratives at play today in the market. You, of course, have the Supreme Court event. If you look at that just as a standalone event, yeah, we were down today because of it, but of course the event has now happened. The vol has been played out in the marketplace, so we expect some vol coming in off an event like that, even though it was a bit of an unexpected result. A lot of people were leaning heavier in the other direction, so there was a bit of that, but overall that probably wouldn't boost vol as much as take it off today. Then, of course, we have the EU weighing on things. That should leave some air in the volatility balloon, you would think, as well as, of course, weak GDP numbers weighing on the market today as well as just, how these domestic issues are going to play out going forward. How does this quote-unquote tax, how is that going to factor into GDP numbers going forward if we're adding all these additional, unknowns on businesses across the country? So you think that would leave still some air in the old vol balloon, and yet I agree. What we saw today was people taking that air out, and I don't know. I'm on the other side of that trade, I think.
I know. So there has to be. I can't see it's the weekend. You don't take the weekend out on Thursday. I'm sorry. Now I know it. At Option Pit we've been like little proponents of a little short, basically short the non-directional volatility, just buying some put spreads and the VIX and stuff like that, because we thought that this was kind of an unsustainable number. I didn't, of course, I didn't close all my short fall positions on the close because I'm like, holy crap, that's really going down. So I was, now tomorrow I'll probably be kicking myself in the head when they put it all back in.
Yeah,
again,
the euro will implode tomorrow, of course, and we'll be off to the races again.
Exactly. It's like I can't even buy an FXE put right now. So, it's what you get for, teaching classes. Sometimes you miss stuff. But
see, the problem of the business pulling you away from the business, it's a fun one to have.
It really is. It drives me nutty a little sometimes. I'm just trying to get stuff out to our subscribers,
Yeah.
Buy another fixed put spread now if you can. It all goes to nothing.
Now, Sean, of course, you were on the desk all day, Sean. I'm sure fielding calls from frantic and perhaps less than frantic customers. Let's start there then. What was the tone you were getting on the desk today? Were people a little surprised by this sell-off? Was this kind of par for the course? Were they buying premium? Were they selling premium? Were they really active in healthcare? What was the general trend on the old desk today?
There's a lot of mixed emotions. Starting out this morning, got a lot of calls. I guess other people don't have TVs or radios, asking me if this bill was overturned or not.
Yeah, I love that because Tim and John have mentioned that too. People calling the desk asking for news updates and things like that. And that always makes me scratch my head. Like, do they not have an internet connection? Do they not have some sort of immediate source of this information? I don't understand. I think it's partly they want to call for that reason as an excuse, but I think they want you to perhaps be a little bit of a psychologist and hold their hand a bit too throughout all this stuff. Why else would you call for that?
Exactly. And by the time I got the fifth call, I saw something coming across the lovely CNBC breaking news. So I asked the guy, would you mind if I put you on hold? I'm going to go walk over by the TV since you can't turn yours on. And walked on over there. Obviously, they voted 5-4. He was all excited, hung up the phone. I got to call you right back. He calls me right back and then just went long a bunch of spy calls expiring tomorrow.
Oh,
believe what they
ballyhoo
were.
For him.
So he had some kind of plan. He was one rare instance. Prior to that, but I had a lot of people just going out buying spy puts, the weeklies. I'm talking week fives. So it was very interesting. From every other call was very odd today. It wasn't like I would get multiple calls in a row where it's just a bunch of bears. It's pretty much bull bear for most of the day. I did get a couple calls. People still talking about ORLY, but I know we're going to talk about that later, so I'll touch on that when we get to that subject later on in the show.
Yeah, interesting to see just what the reaction is from the OX crowd, because you seem like you get a good dose of all types. You get the active, high-end, very skilled people and people who want to call up and sounds like just need someone to hold their hand on the other end of the phone. Yeah, but a lot of interesting stuff going on today, not just from the customer perspective, but just, like we said, a lot of narratives playing into the market, a lot of them being overwhelmed, of course, by the big news coming out of the Supreme Court. But, of course, we also have the 30-year still holding down, 30-year mortgage, that is not the 30-year note, holding down at about 3.66%, which is still a historic low. So you can go out and buy a house right now, Andrew, for 3.66%. That's not bad. Why don't you double down on the old lobster estate?
Double down on the lobster. What I want to do is just build a house on some of my land. That's what I want to do. It's not going to cost me very much right now.
There you go.
So,
take advantage before all these healthcare taxes come in and clip you up, and you're all.
I was about to say I want to know, like, just all the people that love the president. Great, who cares? I don't care about the politics. Does everybody know that 30 million people just got a tax increase? Because the IRS, if you give the IRS the job to try to collect taxes, now the Supreme Court has called them taxes, they will collect the taxes. People are like, I'm not going to pay. Wait till they try to enforce this on 30 million people. What a freaking night. Hey, they get to hire more people. That should solve the employment problem.
Exactly. And these people weren't buying health insurance just because they were cheap. I'm sure there was a portion of them that were, but it's because it's expensive. You can't just tell someone you have to buy it, and that solves their economic woes. Oh, now I can afford it. Now it's much more reasonable.
That's how the thinking goes in some circles on the Beltway. Like, you just hire a bunch of people, the government hires a bunch of people, and it solves the it solves the financial crisis, even though just having liquidity pumped into the system really solved the financial crisis, because now that the housing market's bottomed all by itself and it's doing its thing, finally recovering, it just takes time. You're not going to, if they were letting the private sector work these problems out, we wouldn't have a $1 trillion deficit. We would have probably a lot of growth that could survive this European nonsense. But now, whoever gets elected, I don't care if it's the president or Romney, they have tough decisions to make, because you're not going to be able to finance at 0.5%. It's like Spain. Spain finally threw up their hands. We can't finance our deficit at 7%. Well, no kidding. That's the whole point, because the banks aren't buying it anymore. And now, okay, fine. A hedge fund will go buy your debt for 7%. But a bank that's backed by the ECB will not. I find that very funny.
You know, it's interesting, too. There really is no safe harbor on this whole healthcare issue, because, of course, Obama pushed it through, but Romney did the same thing back when he was governor of Massachusetts. It doesn't matter which side of the aisle you're on or how you view this issue. It's pretty much inescapable. Both sides have their hands knee-deep in these mandates, a.k.a. additional taxes. And I've never understood that way of thinking. I guess that might be my libertarian bent, where I don't lean to one side or the other, but I've never understood that where you just tell someone they have to have it, and therefore it's affordable and reasonable now, and that solves all of their other issues about why they didn't want to buy it before. Oh, well, now I have to have it, so therefore it's cheap and effective and reasonable for me and suitable for my family. I don't know. I don't understand that at all. But be that as it may, we'll leave that to the political pundits and the political wonks to debate over the coming weeks and months. There was some other news on the derivatives front that was particularly interesting. Of course, we talked on this show and on the Volatility Views program as well on this network last month about the sprawling JP Morgan quote-unquote hedge that wound up being a $2 billion loss. Well, the news from today was JP Morgan's expecting it to be about $5 billion now, that quote-unquote hedge, when they finally unwind it. Because, of course, everyone and their mother knows that what they have on, and they're trying to, I'm sure they're being faded to death left and right trying to take this thing off, which is, of course, the charitable nature of the market at work. But some people are expecting it could be up as high as $9 billion as a loss for this hedge, which is just astronomical. I haven't had a chance to dig into the actual meat of what they had on, or maybe, perhaps more accurately, what they did to it after they put it on that turned it into this monstrosity. Because I'm sure at some point down the line it started as a hedge. I'm being charitable in that, and I'm assuming that, giving them the benefit of the doubt, they didn't just start off blasting out a bunch of premium and calling it a hedge. But who knows with these guys. But interesting enough, so yeah.
Can they stop calling it a hedge now?
Yeah, you know, they cling to this
notion.
Yeah, exactly. This ridiculous notion that it was somehow a hedge, because that's how you get it in under all these new rules and regimes and regulatory regimes. And yet it's absurd. You know, the whole thing is ridiculously absurd. It's like Nick Leeson calling his repeated put sales and straddle sales, hedges. It's absurd. But still, yes, so that loss could be anywhere from 5 to 9 billion now, which is amazing in this day and age. Of course, that JPM took another beating today on the street as people were not exactly enthused to hear that news. Anything else catching you guys' eyes today on the street, aside from the miraculous life the market had breathed into it towards the end of the day, or the somewhat, I guess you can call it, quixotic performance of the VIX today?
I want to point out, back to JP Morgan, it did close down 90 cents, but keep in mind it did close $1 off its low. So like the rest of the market, JP Morgan also did. We had a low 34.85, closed around 35.88 on 69 million shares today. So yeah, pretty bad when you woke up this morning. Saw it down $2, but only closing down 90 cents. I think people might have saw a possible buying opportunity here. Yeah, I mean, this one, you're really rolling the dice on this one if you're coming in as a premium seller, or if you're just trying to scoop up the underlying, or whatever the case may be, because, we still, I guess if you factor in the 9 billion quote-unquote worst case, of course, we've heard worst case before, then I suppose you have some sort of downside in mind for this underlying, but, it could be, who knows when they finally finish unwinding this thing, exactly how much it's going to cost them at the end of the day. But this is impressively bad derivatives hedging from JP Morgan on this one. Gotta love it. Anything else catch your eye today, Sean or Andrew, before we dive into the odd block?
Nothing crazy. Just looking at. I'm just keeping my eye. For some reason, just the social networking sector, all the volatilities are starting to hit 52-week lows. So we could cover that later. It's not that big a deal.
How's that synthetic Facebook working out for you?
It exploded today, so it worked out nice. Zynga synthetic Facebook.
Yeah, that's the synthetic. Do you have another synthetic Facebook in mind?
I'm still on the stock and regretting not selling some calls against it when they had their developer meeting yesterday or the day before.
You're long.
I have a feeling that's going
Zynga?
in my kids' college portfolio.
There you go, long-term hold. Because what can go wrong with an app developer who throws around $250 million to buy a flash in the pan iPad app? I mean, there's nothing wrong with that business model.
No, I told all my students never to do this.
Do as I say, not as I do in this one. Yeah. Do not. I'm surprised you being such a diehard fundamentalist, picking up a name like Zynga.
No, that's what it's called, is being stubbornly stupid. But I got it. And we'll see what happens.
And before we close out the trading block, we do have some earnings to talk about today. Of course, we have RIMM. Good old Research in Motion, a very troubled maker of course, BlackBerry handsets, as well as a variety of failed tablets and a bunch of other failed products these days. Reporting their numbers after the bell. Looks like they're a little bit weaker. They closed at about $9.13. They're trading about $9 right now in the after hours, so not too much. Essentially unched right now in the old after hours. So apparently, not that great news coming out of RIMM, but I don't think anyone really expected fantastic news coming out of RIMM these days. This is the name that really just has disappointed time and again from a product perspective. And I don't know anyone who's really betting the farm, aside from a few Canadians, on RIMM. Looks like they were pricing in about $1 move here in the weeklies. So if you were one of these OX customers who's blowing out a bunch of premium in RIMM, looks like you fared fairly well, unless this thing really takes a move right now in the after hours. But this thing almost could open unched tomorrow. That'd be impressive. But yeah, RIMM not exactly lighting it up.
Nike's down $10.
Really? Nike had it tonight too, huh?
Yep.
Is that because you announced to the world that you no longer want to have your Nike Fit, and so the stock just took a beating, Andrew?
Exactly. No, it's funny. I was talking to a client yesterday about it, and we ended up passing on the whole thing because the pricing didn't look. It looked okay. Nothing really was special. But at the money straddle, they're close $5. Yet another at the money straddle, woefully underpriced into the earnings cycle.
Oh, yes.
Weeklies.
The polar opposite of the RIMM example. Nike, of course, closing nearly $97, trading in the after hours 86.5 right now. That front month weekly 95 straddle went out at about $5, and not exactly a screaming sale on that one. So sell the RIMM, buy the Nike. That was the trade of the day, apparently.
Got Family Dollars had some earnings too, down almost $2 here.
You'd think the dollar store sector would be faring well in this environment. That's why we need Tusa on the show. He's our dollar segment expert, but he could not make it on the show today. All right, and with that update for earnings, we're going to close out the old trading block and dive right into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, and that funky tune means it's time for the old Odd Block. And as you might expect, we're kicking off the old odd block with a healthcare name because that is the sector of choice today. We're kicking it off with Universal Health Services, ticker symbol UHS. This is a company that owns and operates acute care hospitals and behavioral health centers throughout the country, as well as radiation oncology centers. So, as their name implies, they truly are a universal health service provider, providing a lot of different services. And we saw them today closing up about 8.5%. They closed at $42.60, up about $3.35. This is a name that on a given day will do about 300 contracts. So not exactly a light up the tape kind of name. But today, that was a little bit different. We saw them do over 24,000 contracts, and the bulk of that, almost 22,000 of those contracts, was in a sizable roll on the call side of the spectrum. We saw someone coming in today closing out a pretty substantial position in the July 40 calls. We saw them close to 11,000, about 10,500, 10,700 or so of these calls trading in a large block mid-market at around $2. Looks like it was leaning towards a buy to close this out against some open interest of around 13,000 on this strike. And given that this is pretty much the only strike with anything close to this size of open interest, this is obviously a close. And then we saw someone rolling this out to what appears to be the October 45 calls. So he's buying back what looked like a short July 40 position for $2, and then he sold the OC 45s for, looks like $1.20, which, given today's activity, is not exactly a screaming sale. I'm sure he obviously did this very early in the session, probably before the big move had run up in the name, because these OC 45s closed at 195 at 210 today. So not exactly a screaming short sale, but obviously he was rolling up and out on his short position, taking a bit of a beating today, but hoping that if he rolls up and out to October, it'll give him a little bit more time and a little bit more breathing room here on the underlying for this short position to come in. He could also be rolling a covered call position. This could be a size underlying holder who's deciding to get himself a little bit more time and a little bit more upside breathing room. Of course, this name, one of the many names off to the races given the Supreme Court decision today on Obamacare. So obviously the market feeling that this is a boon for this essentially universal provider of healthcare services, because with everyone being taxed to buy healthcare, they have to go somewhere, and apparently they're going to go to UHS subsidiaries to get their business done. So a size short call roll here, perhaps a covered call roll in UHS. So Sean, was this you executing this 22,000 lot today?
I did 21,000 actually out of it, not all 22.
Not all 22. You left some scraps for the other guys.
No, I didn't actually get all that many calls on that specific stock. However, I was getting a lot of different calls about the hospitals and other insurers, to name a few.
Any particular ones really lighting up your tape today?
There was a couple that were lighting my tape, actually. The main one was WellPoint. A lot of people going in there buying some puts early on this morning. It was down 2-3%. Then it was all down 5. Look, I think it closed down about 5%. Same with Cigna. And on the hindsight, same individuals taking advantage of some of the hospitals, because the hospitals are the ones that are going to reap the benefits of this Obama healthcare, with these insurers having to pretty much get rid of the brand name nowadays. So you're a pain-kill, suppose you got some kind of injury and you're used to getting the, say, Vicodin name. You're not going to be getting that Vicodin name no more. You're going to be getting something called like Norco or something. Somebody was talking about. These insurers will not be picking up the brand names any longer. So those people who refuse to have generics in the past are either going to have to pony up for it on their own pocket or be taking the generics. Now, whether or not there's a major difference health-wise, I'm not doctor, so I don't know. But I was getting some people talking about that as, just shooting the talk as we were buying these puts and calls. And the main hospital that I was getting the most on was Community Health Systems, CYH. It was surging about 8% when I first started placing the trades, all the way up to 11%. I'm not sure exactly where it closed, but it did a great day.
Yeah, CYH closed at 27.54 today, up about 8%, or about 2 handles on the day. They usually do about 1,000 contracts a day. They did over 4,000 today. So Sean, you were lighting up the tape here in CYH today. But yeah, it's funny how the people parsing out the winners and losers of this ruling today. interesting to see how all that shook out. Of course, you're right. I think all these end providers of these services looking like they're going to do fairly well, whereas the insurers and some of the others who have to deal with the bulk of this mandate taking it on the chin today, because of course no one really knows how that's going to play out for them down the way. And of course, I hadn't heard that about the generics. It's just another interesting unintended consequence of this type of legislation that you don't think about until all the details have to start being worked out. Interesting stuff. Like I said, people always call the OX desk there with some interesting tidbits, some interesting nuggets, which is why we like to have you guys on the show to provide that perspective. And speaking of that perspective, I think it's time to close out the old odd block today and dive right into the Xpress Block.
The Xpress Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and that rocking theme means it's time for the Xpress Block. This is, of course, the portion of the show where the boys from OX hold down the hot seat. Of course, Sean just shared with us some interesting tidbits about what he was seeing in the healthcare space today. So, Sean, I hope we didn't steal too much of your thunder for the Xpress Block in the old odd block, but you said you saw a lot of activity in the healthcare sector today. Anything else was catching your eye today? I'm sure oil was moving quite a bit today. I know you guys are pretty active watching oil over there quite a bit. Any big calls coming in for that?
Oil, not so much, but I did have a lot of individuals who were very interested in the Google conference that's going on right now. And yesterday they announced...
yes, the Google I.O., yes.
I believe that meeting goes till tomorrow. But yesterday they did announce, I believe they're coming out with some sort of their own iPad. I don't know what they're actually going to be calling it.
I believe it's the Nexus 7. It's a 7-inch tablet, kind of a Kindle Fire competitor, I think.
Yeah, so a lot of people were a little bit afraid of the Amazon holders. I had some individuals coming in, not yesterday when the news came out, but more today with Apple being with Google being down and earnings on the 12th. So therefore, they have the chance to get into July options still and make a play on the July 12th earnings, since July options would be expiring on the 20th. So I had some orders coming in for on the all the way out to the 6/15s of July. So we got a stock here that's closing around 564, expiring in about 3 weeks, and people are paying $3 for 6/15. I think what they're expecting to hear, maybe not the best earnings in the world, but looking forward those lovely future guidance words that always tend to either ram a stock up or shove it down on earnings. Future guidance in regards to the Nexus that should be released. I don't believe they announced that date yet. But and one interesting trade I did see today was an Apple vertical call spread. And a gentleman pointing out these are on the week one. It's selling the 585s, buying the 595s for a 55-cent credit. I believe he was doing it, really doesn't matter how much he was doing it. We'll just say he was doing it 10 times. He thought it was a very good trade. He thinks Apple is going to be flat most of next week. I believe Apple is right around 567 range.
569 it closed today.
569, so we think selling those 585s and buying the 595s, taking in a 55-cent credit is an easy $500 for you vertical call spread players out there.
Sean, we've had this conversation on the show in the past. I don't think we've had a chance to have you weigh in on it, but since you mentioned trading Apple, I'm curious, what is the typical account size you see for people calling up who want to trade Apple options? We've had this debate on the show whether you need to have 50, 100,000 to really accurately and effectively trade Apple options, or so what are you seeing someone coming in doing a 10-lot front month vertical? Obviously, the requirements on that are a little bit less, but still, are you seeing people usually have to have about 6 figures in their account to really adequately trade Apple beyond a 1 lot?
That's what you would think, but I do see a lot of people going. Now, in this specific trade, this individual was basically putting his entire account on the line here. But a majority of the guys out there and women trading the Apples and Googs of the world, not only six-figure, a lot of them are millionaires, and they're putting on quite a bit of size. But even the account, $5,000 account, they may do 1-2 lots, same type of trade. Obviously, they're not going to take in as much, but percent-wise, they're taking home the same amount if the trade comes home a winner. So, I mean, a lot of other firms outside of Options Express not only require you to be approved for that level of trading, but they also want you to have a specific dollar amount in your account, or they don't even believe you should be trading that. Well, we at Options Express, we have quite a bit of compliance that is looking over all these accounts, and we have 24-hour margin desks. So just because you have $5,000 doesn't mean you cannot trade these types of trades.
Yeah.
Yes, if you have 100,
okay.
If you have 300,000, you can stomach it a lot more until the trade has expired. But if you have 2, 3, 5,000, you make the same trade that the guy that does a million. You're not going to be able to do as many contracts, but percentage-wise, you're taking home the same amount, win or lose.
It's interesting too. I think the mini contracts, particularly the mini Apple, everyone's talking about. That'll be a big boon for this, and for you guys like you, Sean, who are people calling up wanting to trade Apple, but they can only afford to do a 1-lot. Those 1/10 contracts, whenever they get those sorted out, will be a huge boon to that business. Of course, right now we're talking about Apple and Google. Apple trading about 569 today, closing at 569 today. Google about 564. So these two are pretty much trading neck and neck. Even yet, from a vol perspective, we have Google trading at about a 12-point premium to Apple on from a front month vol perspective. That's intriguing, I think, at least to me, seeing what the market's pricing into Google going forward versus Apple. A bit of a stagnation looks like they're pricing into Apple versus Google. Apparently, a bit rockier road ahead. Andrew, you've been playing in either of these lately?
Oh, as far as Google and Apple, no, we had some guys selling, selling the front month iron butterflies, mostly because I didn't think we were going to get much movement this week, and the trades actually were pretty good. So mostly trades right along those lines. I don't think Apple does too much prior to earnings. Generally has that little earnings run up. But for the most part, that's kind of what we've been looking at. Just sort of like really short-term, just juice selling plays for the most part.
Interesting, given the fact that Apple, we talked about this on the show in the past, Apple had relatively historic lows from a vol perspective. We talked last week about whether the play was buy Apple vol, sell Microsoft vol, which is they were trading about the same level, but perhaps the play actually is buy Apple vol, sell Google vol, because there should be some... Perhaps a little bit of a discrepancy there that people can dive into and take advantage of. I'm surprised your guys are coming in. I'm surprised you guys are coming in and blasting out a lot of juice in Apple. I would think they would want to.
No, just the iron butterfly though, with 3 days to go or 5 days to go.
Oh, they're really short-term stuff. So that's not even going into earnings then.
Because the realized vol on Apple right now, what is it, like 12 or 13? I mean, it's not.
Yeah.
It's not doing a whole lot. And there was still like around 28, 29 volts. Would I sell 28 or 29 volatility in August? No. But, we just set up iron flies right around 1 standard deviation. Pretty typical stuff. I mean, we can go over it in the strategy block if you want to. So, but that's it. It's a short-term trade where you don't have a lot of margin, and you're basically just trying to collect some theta. So we can go over it in the strategy block.
A good idea. So, Sean, unless there's anything else, because we did hijack your Express Block here, anything else you wanted to hit on before we close up the Express Block?
I did want to point out 3 stocks I didn't notice that were up throughout the day when we were down 160, 170. You had U.S. Steel up 5% on the day. A little unusual when the rest of the market's down. You had BTU, Peabody, up 4.5%. And you also had the lovely Joy Global mining company, also up 4%. So 3 stocks standing out, 2 up 4%, U.S. Steel up 5%, when the rest of the market was down. I thought those 3 stocks that stood out amongst the pretty much amongst the entire market today.
Yeah, I have no idea why U.S. Steel would rally today. I mean, they're pretty much linked to the macro economy now. That I don't think, unless there's some surprise news coming out of U.S. Steel today, I can't see why anything coming out of the EU or anything coming out of the healthcare debate or the GDP stuff would be bullish for them, unless maybe some housing news shows increased demand for steel. I don't know what would be driving that today. An interesting factoid for us, Sean. I think that's something to mull over, certainly, as we head into the weekend. But
and lastly, just pointing out, we got couple reports tomorrow, but two bigger ones to maybe keep your eye on. We got personal spending at 8:30 Eastern Time and Michigan sentiment at 9:55 Eastern Time. Sometimes can be market movers. Michigan sentiment more than the personal spending. Overall, we're going to see what's driving the consumer spending, if at all, tomorrow. So I'll be looking forward to those reports and if they affect the markets in any way.
All right, thank you for that, Sean. And now we're going to close out the old Express block and dive right into the strategy block.
The strategy block.
All right, and welcome to the strategy block. This is, of course, the portion of the show where usually Uncle Mike Tusaw comes on down from the mountain to dispense some wit and wisdom. But as Andrew suggested in the last segment, this might be a good time to talk about some of these short-term theta plays that he was talking about, like these iron flies out in Apple. So, Andrew, why don't you take it away, sir?
Well, iron flies in Apple. So this, to me, is a play where you where we kind of are in the market, actually. We have kind of a market that's in a strange place, where one is, I like the idea of being short a little volatility, but in a non-directional way. So you want to be short Vega and flat Gamma, if possible, and probably some of the index. But for some names, and the reason why is I'm not seeing tremendous amount of underlying movement in certain names. So for Apple, I guess, is an example here where you actually want to collect some theta in some of these names. So the idea for that, or why you want to, is that our kind of basically your weekly volatility is still a little pricey, sort of relative to how the underlying is moving. So in Apple, we have a 10-day realized vol in that guy. Let me look at it again. I just want to give you guys the right number here. Has been around, I think it's been around 12, which is not too big, right? So Apple basically has been sitting sort of stuck in the mud for a while. And I have a 10-day vol in Apple at, lower, 1756, right? So around 17.5% vol. The June weeklies expiring tomorrow, we're coming in around 28 or 29% earlier in the week. So armed with that knowledge, we thought about an iron butterfly, which is essentially selling at the money straddle, and you buy the wings that are set up at around a 1 standard deviation distance from your short strike. So for the Apple trade we put on, we sold the 570 strike, and using the actual implied volatility options, which gives you a little wider wings to put on. If I use the lower implied volatility from the realized, actually, I would have a tighter range, but I want to move out a slightly wider run. So on a $10 spread, basically we set up an iron butterfly with $10 between the strikes. So I was long the 580 calls and the 560 puts, and short the 570 straddle. Now we got paid $7. We took in a $7.20 credit for that thing. The most that thing can be worth is $10. So we were risking $7.20, or we were risking $2.80 to potentially make $7.20. Now you rarely hold something on till the very last day. You know, it's rare something is going to just magically close right in the middle of the last day. So what we want to do is we set this up to pick up a couple days of decay. The theta in this trade when we put it on was about $40 a day. So a one lot trade in 3 days yielded around $300 actually, because we had theta, we had a little volatility come in. It kind of worked very well. So sometimes what happens is, if you're interested in collecting some theta short term, but you don't want to sell a lot of Vega, which would be in kind of a back month of a stock. There's lots of stuff you could sell, iron condors and things like that when you go out 60 days or more, and you want to kind of localize it. So by using an iron butterfly, you keep your risk relatively limited, right? So on a $10 spread, you take in a $7.20 credit, you only risk $2.80. So as long as the trade actually can meander outside your strikes a little bit, so as long as the trade's kind of up money and the theta is working for you, you kind of keep it on. You can do adjustments, which is another segment. But what it is, it's a nice way sometime for kind of like a tweener trade where, you're not comfortable selling index volatility, but you like the idea of some stocks aren't moving very much. But the fact that we've had this kind of elevated VIX lately, we haven't had a lot of real underlying movement relative. Some of these iron butterfly trades make a little more sense because you're just really locating the gamma or the theta to just a few days. And
yet another reason why the iron fly is one of my favorite positions, next to, of course, the risk reversal, which we talked about on last show. So we're hitting all my favorites, it seems like, one by one. But yeah, the iron fly, very useful. And of course, you're right. In a position like this where you want to collect some theta, but you don't want to be that exposed to short Vega right now in Apple. I can't imagine anyone who wants to come out and blast out a ton of Vega, particularly in front month where it's 24.
Exactly. So you're like, okay, I'll just take the 3-day trade. So it's just a way to pick up a little theta, really, really reduce your risk, try to dial it down as much as possible, and let the rest of the market kind of do its thing. And today, obviously, the volatility did come in toward the end of the day, which we're all shaking our head over, and you just got the double whammy. It helped out a lot in Apple. I was telling people today in the pit report, think about closing your Apple iron flies today. You don't have to try to stretch the last nickel out of them tomorrow. So
what fun is that? You want to squeeze to the last second, Andrew, of course. That's where all the excitement and the ulcers come.
Exactly. Somebody, what a trader friend, I used to call it the tingle.
That's one way to call it.
The tingle, yes. You're like, your tummy gets a little fluttery. So, but that is a strategy, and it's not, one lot's about $1,000. Right, in pure buying power, but at risk, you're only risking really $280. So it's one way to trade Apple, isolated, obviously, when you don't have a ton of margin in your account. And, you have to be selective. The good thing about Apple is you can kind of, you can put an offer in for one of these things, and the way Apple trades, they usually get lifted at some point or another. So
good tips, Andrew. Thank you.
Just works. Anyway,
it just works. You don't have to do stuff.
Yes.
Especially in these short-term ones, not much stuff you can do. So that's a nice thing too. But I think that's a great tip, and of course, I think a great secondary tip, perhaps we can come back to one of these days, is your mention of using the realized versus the implied when you're pricing up and you're establishing your position, because of course those are two very different ways to do it, and some interesting pros and cons of doing it either way. So maybe that can be a future strategy block segment, perhaps.
Yes, you don't want to run into that realized.
No, you do not. But of course, we're running short today, so we'll have to cut it there. But a fantastic strategy block, sir. And with that, we're going to dive right into Around the Block.
Around the Block.
All right, and welcome to Around the Block. This is, of course, the portion of the show where we discuss what's on our screens, what we're watching for the coming sessions going into the weekend. And we'll start things off with you, Mr. Maine Lobster. Aside from all of us collectively scratching our heads over the VIX, if they took the weekend out today, what's going to happen tomorrow? A whole heck of a lot of nothing, I guess, if you think that's what happened today, I guess.
I don't know. I'm just hoping I can actually close something tomorrow. I've been watching kind of the seesaw now for a week, but whatever. I guarantee I won't be able to close the Zynga trade tomorrow. So
why would you want to close that? It's your long-term collegiate hold for your children.
I know. I just got to remember to sell calls against it when it rips. I did it once. I didn't do it the second time.
Take your money and run, sir. Thank you for that, Andrew. And Sean, I know you mentioned in the odd block a couple of the numbers you were keeping an eye on for tomorrow. Anything else really catching your fancy, catching your interest going into this weekend? Actually, what do you think about what happened today in terms of the movements we saw in Vol and the VIX? Why do you think people would be essentially taking so much of the steam out of VIX when really, and perhaps even taking the weekend out. That seems to me to be a very aggressive move if that was indeed the case. Do you think that's what was going on today, or do you think a lot of people just kind of scratching their heads?
It's an odd, having 4th of July in the middle of the week. I'm questioning and wondering if people are wrapping it up tomorrow.
Yeah, heading out for a long midweek holiday. Yeah,
I mean, because I just can't figure it out either. You would think it would just be a little bit different story the VIX than we saw today. But one thing I am watching going into tomorrow's close is the crude oil here. From what I'm seeing here, it looks like the market did rally. Once crude oil took off around 2:30, it was at the low, and it popped the buck from 2:30 till about the market's close, and pretty much took the market with it. Market was down about 160, 150 roughly at that point. Crude oil at its lows, crude oil rallies, takes the market with it. I'm talking August crude here, closing around 78.38. To be interesting if we can get near that 80. Well, we did have a high of 80, 84 today. That was late overnight. It's going to be interesting if we get anywhere near that $80 mark to pin it before the weekend ahead.
All the recent action we've seen in crude really just puts the lie to the notion of diversifying your equity portfolio into commodities, because crude and the markets have been moving in lockstep for the better part of the last month. It's really, I'm not sure you were on the show last week, Sean. I just came back from the Morningstar show last week. A lot of fund managers, a lot of asset managers talking about risk management and through diversification, and diversifying their portfolios into commodities and things like that. I kept asking them. They have no mention of options, no mention of hedging with protective puts or anything like that, writing calls for income, things that you think would be pretty normal if you're managing hundreds of millions or billions of dollars, that you would have that skill set somewhere. But a lot of them still, in this day and age, given all the evidence like we saw again today, crude and the market really moving in lockstep, still talking about managing their risk and through diversification and how, I can diversify across these different disparate asset classes, when, as we're seeing, the correlations are moving closer and closer to 1 across the board. So if you want to really diversify, if you want to really hedge, you can't just go out and pick, a little bit in fixed income, a little bit in commodities, a little bit in gold, because they're all moving with a close to a delta of 1 pretty soon. So it's an interesting time, and it seems like a lot of the big money is still kind of stuck in a very antiquated mindset. And days like today should be more proof to that pudding that you really need some sort of derivative component if you want to accurately protect yourself and perhaps diversify yourself across a couple of different asset classes. God forbid you have some volatility hedge and exposure in your portfolio.
You couldn't have said it. You couldn't have said it any better. A couple of years ago, you're thinking stock market's gonna go down. I'm gonna buy some gold. Well, you bought some gold. Guess what? You're down 25 ounces today, and the market's down. So you can't. The market, and the whole concept of hedging has changed. So, like you were saying, buy crude oil, buy a little bit of this, but you know what? You're right. The delta is about 1 now. Everything seems to be going together. There's not really one thing that stands out anymore. Where 5 years ago when gold was $1,000, market's going down, gold kept going up. Now it seems like gold kind of has a mind of its own, and many times it's going to follow the market as well.
Yeah,
not 100% hedge. That say the Dow is going to go to 10,000, that's fine. I'll just buy a bunch of gold and it's going to go back to 2,000. No, there's no guarantee there anymore. Today's a perfect example. We were down 25 ounces on gold, and the market was down as well all day.
And we just talked in the strategy block about iron flies, and that's a little bit down the rabbit hole from an options perspective. It doesn't have to be that sophisticated. If you have an equity portfolio, you should at least know how to buy a put. Hopefully, if you're listening to this show, you've mastered that simple trade by now. If not, we've really failed at our jobs here at the option block. But it's interesting still to see so many significant institutional money managers and asset managers still not waking up to this very simple fact that everything is correlated these days, and you need to move beyond the traditional asset classes and beyond the old school ways of thinking if you want to really survive in this environment. It should be good for guys like you, Sean, because people should be awakening to that fact that, hey, I can put a put on. I should pick up the phone and call Sean, and he can help me walk through this kind of stuff. It doesn't have to be a big institutional fund. It could be a little retail 10-lot guy waking up to that fact. The more the merrier from that perspective. But either way, interesting stuff. Of course, a lot of interesting stuff to watch going into the weekend. They still are meeting out there in Brussels to determine what's going on out in the EU, talking about Spain and Italy quite a bit now in that meeting. No concrete developments from there. It seemed like everyone was really fixated on healthcare today. So we'll have to watch. Like I said, you guys will be listening to this tomorrow when it comes out, so we'll have a little bit better perspective then about exactly what's going on with the VIX and with the vol, and if they are indeed taking the weekend out. I can understand that a little bit more if it was the holiday on a Monday, maybe a Tuesday. I could see maybe getting a little bit aggressive, but with the holiday on a Wednesday, 2 full trading days before that on the week to have anything happen, I think you have to be crazy to really start hitting the bids now and try to take that decay out now. I mean, you saw what happened last year in August. You saw what happened with the downgrade. You saw what happened with all of the things subsequent to that have caused very literal weekend risk for a lot of people. And to just start dumping that risk right now ahead of the weekend, 2 days going into it, God forbid even dumping it into going into July 4th of next Wednesday, that's just crazy to me. I don't understand that at all. So perhaps hindsight is not 20/20 for a lot of these people. But with that, I think word of warning, I think we're going to close out the old Around the Block segment and also close out, unfortunately, this episode of the Option Block. It was a fun one, but all good things must come to an end. But before we go, Andrew, why don't you give us a little preview of what's coming up over in the land of Option Pit?
Apple, July 21st, we will be talking the VIX-based indices. My compadre, Mark Sebastian, actually very useful talk, and actually using the Apple VIX is kind of a nice way when you're looking at these, what we just talked about, these iron flies. Might as well use the indexes and all the products out there and the indicators that they give you. So on the July 21st, sign up. It is a great class, and we do try to teach people stuff. So we do stuff, we teach people stuff.
And you teach people to do stuff even better.
Teach people to do stuff. So it's a good opportunity to learn. So Mark and Russell do a great job. And that is July 21st, Saturday at 9 a.m. Go to our website and scoop it up.
All right, thank you for that, Andrew. And Sean, I will turn the table over to you now, sir. Any interesting events or developments coming up on the horizon for the boys over at OX?
Actually, last time I was here, I was speaking about that earnings calendar. It's almost completely done in beta. Should be out on the 1st of September. Again, this is a calendar where you can go back. It's actually a chart, and I'll just use Google as an example. You can go back with Google coming out with earnings July 12th. You can go back to 4 quarters and see how Google reacted the day after or the day of, if the earnings are announced in the morning, or in Google's case, they always announce at night. So you can go and look on July 13th and see what percent Google went down or up. That's pretty much what we've been really working hard on here at Options Express. And earnings, because a lot of customers are really into earnings plays, whether it be straddles, whether it be just straight up calls, puts, or just buying the stock in general. So it's something we've been putting a lot of work into. And again, it's called the Earnings X Factor. Should be out September 1st.
You said it's in beta. Can they check out the beta version on the site right now?
They cannot check it out on the site right now. It's a beta version for people like myself working on the desk. It should be live September 1st for everyone to use.
All right, a bit of a tease there, Sean, but people were looking forward to that. In a few months, they can play with that for themselves. And, of course, they couldn't make it today, but I have to give them a plug. Check out the boys over at Know Your Options Inc., Mike, and the rest of the team if you want to see what's going on over there. Surf to knowyouroptionsinc.com. Click on their 18-minute portfolio review and see what the boys at KYO can do for you. And, of course, last but certainly not least, if you want to learn more about any of the topics we discussed on the show today, the strategy, the education, the news, the analysis, the unusual activity, whatever the case may be, then surf on over to theoptionsinsider.com. You can find all of that information and much more, including all of the programs on the ever-expanding Options Insider Radio Network. And, of course, all of you listening to us on iTunes, Apple just added the new podcast app. It's a separate app you download directly from Apple right onto your iPhone, iPad, whatever the case may be. I've been playing around with it over the last couple of days. It's very nice. It certainly is nice to have us out of the iTunes podcast ghetto where they've been kind of increasingly marginalizing the podcast. Now we have finally our own app, so I encourage all of you to download that app, and it should pull all of your subscriptions in from your iTunes library. If not, it's pretty easy to find us right in the directory. Just search for Options Insider. You'll find this program as well as all of our other programs. And before we go, we, of course, all of us here on the old All-Star panel want to thank all of you out there in the listening audience for downloading and streaming and subscribing to this program and making it such a success. And we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.